Hi guys. Today we will analyze Lam Research stock, and calculate its intrinsic value using two different valuation models. Enjoy! Hit the like button and subscribe to my channel if you want to see more videos like this. Technical analysis. Lam Research's overall performance in the market is below average. Also recent evolutions are not positive. The short-term trend is neutral, while the long-term trend is still negative. We need to see a little more continued positive action to open a long position. Support level is around $530. The next support levels are around $470 and $380. Resistance levels are around $556 and $610. The next resistance level is around $715. In the last month the stock has been trading between $466 and $573 range, which is wide. It is currently trading near the high of this range. It may be a good idea to wait for a pullback before considering an entry. The stock has an average volume of 1.4 million. This is a good sign as it is always nice to have a liquid stock. The stock is currently trading in the lower part of its 52-week range, which is not a good signal. Intrinsic value. Buy low, sell high. We have heard it many times before. But how to know when it's low, and when it's high? The intrinsic value of a stock is its true value. It refers to what a stock is actually worth, even if some investors think it's worth a lot more than that amount. Intrinsic value is important, because it can help investors understand whether the cost of a stock is undervalued, or overvalued compared to the market value of the stock. Let's calculate the stock's intrinsic value. For more accurate results, we will use two different valuation models to calculate the intrinsic value of the stock. Discounted free cash flow model, using the formula below, then, valuation based on earnings per share, 5-year average P/E ratio and expected growth rate. First model, discounted free cash flow valuation. This spreadsheet contains some financial data that we will use for the stock valuation. We see that the average revenue growth rate of the stock has been around 23% per year, for last 5 years. We see that the average profit margin of the stock has been around 24% per year, for last 5 years. Also we see that the average free cash flow to net income rate of the stock has been around 97% per year, for last 5 years. And we expect 8% per year average stock market return. Now, let's consider 3 different scenarios for Lam Research Company: bad, average, and good. First scenario. Lam Research will have bad performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be a low, 8%. Future profit margin would be a low, 18%. Future free cash flow to net income rate would be a low, 70%. In this case, the fair value of the stock today would be $290. Second scenario. Lam Research will have average performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be average, 9%. Future profit margin would be average, 21%. Future free cash flow to net income rate would be average, 80%. In this case, the fair value of the stock today would be $389. Third scenario. Lam Research will have high performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be high, 10%. Future profit margin would be high, 24%. Future free cash flow to net income rate would be high, 90%. In this case, the fair value of the stock today would be $507. Second model. Valuation based on earnings per share. This spreadsheet contains another financial data that we will use for the stock valuation. The current earning per share price for the company is 32.1. Minimum rate of return. I will use 12%. Because when we invest in individual stocks, we are looking for a higher return than the S&P 500. For Lam Research, analysts forecast growth rate around 10% per year in next 5 years, and future P/E around 16. Again, I will use 3 different scenarios for Lam Research Company: bad, average, and good. First scenario. Lam Research will have bad performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be a low, 8%. Future P/E would be a low, 14. In this case, the fair value of the stock today would be $324. Second scenario. Lam Research will have average performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be average, 9%. Future PE would be average, 16. In this case, the fair value of the stock today would be $402. Third scenario. Lam Research will have high performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be high, 10%. Future PE would be high, 18. In this case, the fair value of the stock today would be $491. As you can see, today the stock is overvalued, $556, even if we expect the company's high performance in future. The fundamentals are good. This is a good company with a medium growth rate in a fast-growing industry. I'm not very familiar with this company, so, in my opinion, the stock is currently a little bit overpriced. The stock's fair value is between $400 and $500. I'll add the stock to my watch list. I need to do my due diligence on the company. Company's strengths. Lam Research supplies wafer fabrication equipment, WFE, and services that are vital to the production of semiconductors. It offers a range of products used in thin film deposition, plasma etch, photoresist strip, and wafer cleaning processes. Lam is experiencing accelerating growth rates and rising market opportunity, driven by non-traditional markets that are going digital. The pandemic has accelerated the process of digital transformation, and the post-pandemic economy will sustain this momentum. Fabless semiconductor companies cannot meet demand and are turning to WFE companies, such as Lam. Even after the shortage is addressed, which could take up to a year or more, secular drivers are likely to keep demand robust for the long term. The key drivers of current and future WFE demand remain a broadening in demand to formerly underserved or untapped markets such as automotive, healthcare, security, and others, and still strong demand in traditional markets such as enterprise IT and consumer edge devices. The company has strong industry fundamentals. It has the financial strength, market leadership, and growth characteristics to weather any storm and emerge a stronger player. The company has a return on assets of 27% and return on equity of 71%. This is amongst the best returns in the industry. Its profit margin of 28% is amongst the best returns of the industry. The revenue is expected to grow by 8 to 10% on average over the next 5 years. In the coming 5 years, the earnings per share will grow by 12% yearly. Risks. Lam anticipates ongoing headwinds from COVID-19 and supply chain constraints. The semiconductor industry is a cyclical growth industry, and Lam is vulnerable to classic risks such as sudden drops in demand for semiconductors, inventory congestion in the chip distribution system, and declines in demand and orders for semiconductor equipment. Lam relies on a relatively small number of large customers, and changes in demand and delivery timing as a single customer could hurt its results. The company's products may cost up to $10 million per system, so the timing of a single sale may affect the smoothness of quarterly results. Maintaining a competitive edge in Lam's high-tech field requires substantial spending on research and development, even during industry downturns. The semiconductor industry is international and Lam generates most of its sales outside the U.S. This poses risks in terms of currency translation, tariffs and other trade barriers, and the need to satisfy different international regulators. Lam stock is recommended for patient investors, as uneven timing of industry and economic recovery can cause volatility in the shares. Thank you for watching. If you found this video helpful, please hit the like button and subscribe to my channel.